What's up, everybody out there? This is Julius Nyanda with Homeowner Help Radio, helping you get and keep your financial house in order. I'm here today really just to talk about gift funds as it relates to down payment. So yesterday we spoke about income and tax deductions and how that affects your approval. Today I'm focusing on the money that you receive from a family member or loved one to help you buy your house, what we call in the lending industry gift funds. So I've got a cool set of slides for you that kind of breaks down the different issues and things that you can run into when you're applying that can hurt your approval. So I want to make sure those funds are handled correctly. I can't stress this enough, and for all the people out there that even though I talk a lot to first-time home buyers, and technically a first-time home buyer is somebody that has not bought a property or owned a property in the last 3 years. So if you haven't owned in the last 3 years, you are a first-time home buyer. Now, with that said, everyone out there who has not borrowed money in the last 24 months, consider yourself a new homeowner, a home buyer, or let's call it a new borrower. Only because in the wake of this major foreclosure crisis that we're coming out of and we're still in, a lot of lenders are updating guidelines. So all you really know is every single week, lenders are changing guidelines and making it harder and harder and harder to borrow money. Maybe they're lightening up on some places, but in a lot of places they're just making it harder to borrow money. So a lot of these updates that I'm giving you are going to be useful for that. So let's jump right into these slides based on how you deal with gift funds when you receive money from family members and loved ones. Stay tuned.
Welcome to the slide presentation portion of today's episode. This is episode 2, how family funds can be a gift or a curse. So keep that in mind. Silent Deal Killer series. Why we call it the Silent Deal Killer series? Because these are mistakes that we see from borrowers that are trying to borrow money that essentially can kill your deal. So we don't want to see that happen to you, so pay attention. Plan ahead when borrowing money. Who do you meet with? You meet with your loan officer, you meet with your tax advisor. Find out what the implications are of purchasing the home and find out how to best prepare to qualify. Down payment, credit scores, and knowing your income situation are always going to be the things we look at. Last thing you want are surprises at the application or surprises at the closing table. You're going to see this slide every single time I talk to you because it's so important that people plan ahead when borrowing. Let's jump into down payment. So first thing about down payment is one, you got to have it. Everyone needs to have a down payment. At least 3% of anything you're purchasing. Just plan for that. If you're buying a property for $300,000, plan to have $9,000. The other thing that people get in trouble with is everyone needs closing costs. That's at least 4% of the transaction a lot of times. 4% of the transaction on $300,000 can be $12,000. Why is that? Because there are non-recurring closing costs and recurring closing costs. Non-recurring are things that happen one time, points, escrow account, anything that you're going to pay one time and you're not going to have to pay after you own the house. Recurring are prorations, meaning prorated amounts, per diem amounts on what you are going to pay when you own. So you're going to pay a portion of your mortgage. You're going to pay a portion of your property taxes. You could have HOA. Those things can add up quickly, and that's how you get to that 4% number. When you look at down payment, one thing to note for people that are trying to get down payment assistance is that even though you're getting down payment assistance, and I don't even care if you're getting $100,000 on a $300,000 house, you still have to have 3% in that deal a lot of times. They may be able to allow you to get that from a family member, but they at least want you to have skin in that transaction or skin in that game of at least 3%. Down payment sources that are acceptable that we see are bank accounts, retirement funds, retirement fund personal loans. I want to pause here. For retirement funds, if you cash out, we automatically assume that you're going to take a 40% hit because of taxes. So if you have $100,000 in your 401k and you want to draw that out, we're only going to count $60,000 of that towards the transaction. If we're talking about retirement funds, the other option you have is to pull out a personal loan. If you take a personal loan against your retirement funds, even if that's going to be paid back to yourself, you still have to count that in your debt. So those debt payments are still going to be counted against you, so keep that in mind. Other accounts that we see, IDA accounts, investment accounts, insurance accounts. Most important thing I want to point out, large deposits will be sourced. They have to be documented. So we want to see how that money got into your account. If you can't do that, that money will be disqualified. What does that mean? The first rule is cash is not acceptable. Any of you out there that are getting these large cash deposits right before you buy a house, just keep in mind that you have to turn in 2 months of bank statements showing those funds are seasoned. And in those 2 months of bank statements that we normally see, sometimes 3 months depending on your program, got to make sure there are no large deposits, because if we see cash that you can't document, that money will be disqualified. When it comes to gift funds, must be an immediate family member. Parents, grandparents, uncle. These are people that you can go to borrow this money. The reason why we want it to be an immediate family member is because if it's a friend or a coworker, we don't know if you guys have some backroom deal where he's got to lend that, or you got to lend that money, or you got to give that money back to that person or pay that money back. We don't want that. We want this to be purely a gift. If the person wants to give you a gift, keep in mind that they now are part of the loan process. Very first part is that they have to give you a gift letter. Oh, skipped ahead a little bit. Let me go back. They have to give you a gift letter. In that gift letter, you'll see there's a donor. They have to give their address. They have to give the sum of money that they're giving you and their relationship to you, the property address, where those funds came from, what bank they're located or institution they're located, what the address of that institution, and also the account number and their phone number so we can call them to verify all this. So they still have to provide a lot of information even though they are not doing the loan. Gifts are heavily documented. One thing to note, as the gift donor, they're going to provide you with a statement showing their ability to gift. So the gift donor has to show their ability in the form of a bank statement with those funds in that account. Again, large deposits will be sourced. So if that donor turns in a statement that shows they deposited $50,000 the day before, we're going to want to see what that is. They must write you a check or cashier's check from that account. That account that they listed in the gift letter, that account that they provided a statement for, now they've got the check showing that, hey, it's coming from that account. On your side, as the borrower, you've got to make a copy of that check. You make a copy of the deposit slip in the account that you deposit that check, and then you provide the statement showing your proof of receipt. Now we've got a connection between the gift donor and you, and everything's documented for our file, all nice and tidy. Now you can close on your transaction. If all of these elements are not included, the gift letter, the relationship, the documentation of the exchange, these funds will be disqualified from the file. Hope this made sense to you. Hope you learned something. If you didn't, please hit me up, Julius at helpradio1.com. I'd be happy to answer any additional questions, but thanks for listening to this portion of the episode 2.
Alright, so thank you so much for watching today's slide presentation on gift funds. Hope you learned something. Hope you got some value. Let us know what topic you want to hear about. Every week, every day, we're going to be trying to throw things at you that we feel are going to help you through the loan process. Hit us up at helpradio1.com. Send me an email at julius at helpradio1.com. Let me know what you think. We'll probably attach that gift letter that you saw in those slide presentations beneath in the blog entry. So stay tuned. Let us know what you think. Again, hit us up with topics that we can help you out with. But thank you so much for visiting Homeowner Help Radio, where we help you get and keep your financial house in order.